Okay, so last class we initiated this whole discussion around the constitutional constraints which have been put in place to the taxing power of a sovereign, which are otherwise uh, quite wide and one may consider them to be unfettered. It is in that backdrop that the first level of constraint we were examining in terms of the legislative competence. Uh, the dispute in question and the landmark ruling of H.S. Dhillon is what we had been discussing. And we had stopped at this point where the controversy before the Supreme Court was being raised in terms of seeking a clarity as to under which entry is the Wealth Tax Act being imposed. Whether it was 49 under list 2, if it is, then the central government couldn't impose it. Whether it is 86, then the question was that how come now agricultural land which was otherwise excluded is also being brought and included within the fold of wealth tax despite such kind of an exclusion, or then whether it is the residuary entry 97. Uh, we had captured the arguments which were being made both on the side of both the parties, and consequently the crux of the dispute uh, was in terms of deciding the extent of the residuary powers, right? The arguments of the respondents, the individuals who were challenging this act, was that this very words exclusive of agricultural land in entry 86 were positive prohibitions on the parliament's power, and consequently then parliament could not have included agricultural land within the meaning of this act which is being operationalizing. The the contention was that when a matter has been specifically been excluded from an entry in list 1, it is apparent then that it can't be included by virtue of the residuary entry 97. Uh, the counter view which was given by the government was that no, there was no such intention that entry 97 and its scope could be limited to the extent being proposed by the respondents in this case. The only question that one would have to keep asking is that whether that matter is finding its references in list 2 or 3. If it does not find those kinds of references, then we can very well resort to the residuary entry 97, which they said they were doing in this particular instance. Here is when that comparative thing we had seen in the last class came in focus, that see, whenever something was getting excluded from list 1, it got simultaneously included in list 2. It was only with respect to that exclusion about that capital value of the agricultural land having been excluded from entry 86, never found a reciprocative entry either in list 2 or in list 3. Now, the reading of this as the majority ruling of the Supreme Court in the H.S. Dhillon gave was that this kind of a power vacuum could not have been intended, right? The fact that something got excluded from the list and then never found any other home to go to in list 2 or 3 in itself is indicative that there is some kind of a gap, a vacuum which is existing, and merely for the fact that you excluded it in first place will not be a reason to then restrict the scope of entry 97. The Supreme Court observes that if the kind of argument which the respondents were making was accepted, right? Because the respondents were very continuously harping that, look, 86 itself has excluded this matter, the agricultural land. So then it cannot get this kind of a backdoor entry by virtue of the residuary entry 97. Supreme Court reads this kind of an argument as not being acceptable, because then they say the majority ruling says that if this is what is taken on board, then Article 248 would have to be redrafted as Parliament has exclusive power to make law with respect to any matter not mentioned in concurrent list or state list, provided it has not been mentioned by way of exclusion in any entry in list 1. We do not simply have a power to read Article 248 in that fashion. There is no some such kind of inference can be drawn from the existing wordings of 248, and consequently then 248 read with entry 97 is something which is capable enough of capturing this particular matter which is falling within the cracks. In fact, the majority gave this kind of a test to determine the scope of residuary power. The test to determine the scope of residuary power is to examine whether the matter sought to be legislated was included in list 2 or 3, question mark. No questions had to be asked in respect of list 1, right? So a formula which is being given to you to decide whether something is falling within residuary power is to ask whether it is expressly falling within list 2 or 3. Answer to it will give you a kind of a inference as to whether it falls within residuary power or not. If that subject matter did not fall within list 2 or 3, then the inference that you draw is that the parliament did have requisite legislative competence to pass the laws with respect to that specific matter, right? The fact that it has gotten excluded in list 1 is not a question that you have to ask, or is not an inquiry that one is to make. Consequently, this is something which is the majority is favoring the upholding of this kind of a levy, uh, which also now includes the agricultural land within its fold. To answer, therefore, whether it is under entry 86, because remember, one had started out with posing those questions ever since the Wealth Tax Act was put in place, whether it is, entry 49, 86, 97, what exactly are you doing? The response now which is being received is there is a distinction between the true net wealth tax and the one which is levied under 86. Under 86, it was not incumbent on the parliament to provide for any deduction of debts whilst ascertaining the capital value of assets. There are these kinds of distinctions which one is seeing between entry 86 itself and the way in which the Wealth Tax Act was being envisaged. Therefore, it seems that the whole of the impugned act clearly falls within entry 97 of list 1, right? So you are drawing it out altogether from 86 and putting it under the fold of entry 97, the residuary power. Now, of course, the court was questioned that, all right, then what about Sudhir Chandra Nawan? There, so you all had said that, no, this is looking like 86. And this is very peculiar of this case. It's like, this is a very heavy case in the sense that, all the arguments, reasonings of the courts, you will find the Constituent Assembly debates around the residuary power, of the parliament being examined and explored in the judgment. But this is something which is very peculiar to law people. It's only a law person who could have done this. The Supreme Court turned around and said that, look, this court had never held that the original Wealth Tax Act fell under entry 86 of list 1. It was only assumed that the original Wealth Tax Act fell within entry 86. And on that assumption, this entry was analyzed and contrasted with 49, right? So when you originally started out, you contrasted the Wealth Tax Act from entry 49 and drew it closer to entry 86. Now that one is zooming in further, one is making a distinction between the Wealth Tax Act and entry 86 itself and putting it under entry 97. Still, there is this kind of question being sounded out that however, assuming that the Wealth Tax Act is held to be a legislation under entry 86 of List 1, there is nothing in the Constitution to prevent the Parliament from combining its powers under 86 with powers under 97, right? So there is this kind of a conjunctive reading also, which could be lent to these kinds of levies as is being suggested, right? So you are supplementing whatever are the lacunae of 86 with 97. This is something which is coming through the majority ruling. So this was a ruling given in terms of 4:3. But we do also have a minority view which is being taken in here, who did take this kind of a line that no, this is very much inconsistent with the entire scheme of the distribution of the fields of legislation, because every time one is coming across the subject matter of agriculture, it has been entrusted to the state governments, and this is not the correct kind of a reading, right? The fact that you got some subject matter excluded in first place, then you could not have gotten it back by virtue of entry 97, right? Consequently, this became a landmark ruling in terms of understanding and interpreting the residuary powers of the parliament. As I was referring even in yesterday's class, this was amongst the rulings which was again cited when the three farm laws, of the center were being challenged. So this is, of course, a very good read when it comes to your, constitutional law related discussions, but it does also have its roots within the tax dispute, and hence also relevant for us. I'm sure the other detailing and other examinations of the residuary power will be undertaken at a larger context in your other course on the constitutional law. But this is also something which is important for us to resonate with. Let me see, there's some comment in the chat box. Just a moment. The chat box. How come the chat box has vanished? Yeah. So this is some kind of a confirmation being sought that even if list 1 bars something, if it is not there in list 2 and 3, the parliament has competence to legislate. Yeah, at least from this ruling, that is what is being suggested. That something which has been excluded from list 1, if you find that that subject matter is not falling expressly in 2 or 3, then it is assumed that it is covered under 97. Service tax regime, which was rolled out in our system, was primarily routed through this entry 97, right? Because despite all these range of taxes which were being mentioned in list 2, and mind you, there are no taxes in list 3, service tax was something which was found nowhere, right? But again, it might not be the apt example in the sense that it was never excluded from anywhere. However, you will find these range of challenges which were being put across even on the service tax regime, when there's this particularly this case where chartered accountants were challenging the levy of service tax on them, saying that they were always subjected to professional tax. And now that service tax is being also imposed on them, this is something which is covered under professional tax, which is being entrusted to the state governments. If you read that ruling, which is under the service tax regime, they were arguing that, look, there could be no profession which is devoid of service. So essentially, whenever this power was given to the state governments to tax, the professionals, this is also comprising within itself the service element, and therefore the central government could not have imposed service tax on the chartered accountants because they are already paying the professional tax to the state governments. And yet, even the service tax levy on these professionals was upheld. That was upheld on the grounds of the other line of case that we are exploring today, primarily the aspects doctrine which has been within the Indian jurisprudence since quite some time. In fact, in taxation laws and the litigation that we come across, anytime there is a challenge to the legislative competency of the imposition, the aspects doctrine has come to the rescue of the government. This is been a very critical doctrine which has played a dominant role in the way in which number of levies have been upheld, despite them apparently being, double tax kind of a situation, a Canadian kind of, it has Canadian origin to itself, and yet is something which has found to be, deeply rooted in the Indian jurisprudence since quite some time now. Uh, Let me just move on to the case in question. This is the other example if you would want to explore the Nazareth case, second gift tax officer versus Nazareth case. This is also very much an extension of this kind of the legislative fields which one was contesting, right? So we are skipping this for this time. We'll not spend the class hour on this particular matter. It's pretty straightforward. Now, let's come to this specific case, which is so very important in the way in which we have been disputing and then also upholding the kinds of the levies which come by. Federation of Hotels and Restaurants Association versus Union of India. This is a case where a challenge was being launched against the imposition of expenditure tax, under which a tax at the rate of 10% was chargeable on the expenditure incurred in a class of hotels wherein room charges for this kind of accommodation were 400 per day or more. Essentially, what the government had done is this is a central government levy. They were imposing 10% tax on the expenditures which were being incurred by the customers who were patronizing this class of hotels. And what was the class of hotels identified? Those hotels which was providing accommodation worth rupees 400 and above. Hmm? The expenditure which was being subjected to this kind of a tax included all those expenditures being made in this class of hotels, including in connection with that accommodation, any kind of a food or drink which one was taking, whether at that hotel or maybe outside the hotel, or any kind of hiring or lease or other kinds of services which were being availed from that hotel, right? So you have a situation where if a hotel was providing this kind of accommodation, but was also having this restaurant and maybe coffee house and maybe some catering services, any kind of an expenditure which was incurred with respect to that hotel, you are not staying in that room, but you are just going and having a coffee in that restaurant, one would be subjected to this kind of expenditure tax. As against this, if you were only a cafe, right, and people would come there, sit around, have a cup of tea and coffee and then expend money there, those were not subjected to this tax, right? So there was this challenge being launched by the Hotel and Restaurant Association on three grounds. One, they stated that having regard to its nature and incident, the impost is not really speaking an expenditure tax because it is not something which is according to the economist's notion of such a tax. The law in pith and substance is really a one which is imposing tax on luxuries, Tax on luxuries falls under entry 62 of list 2, or at the max it looks like this kind of a tax on the price which is being paid on the sale of goods, etc., which is also falling under entry 54 of list 2. That is one limb of the challenge. Second, that this Expenditure Tax Act is violative of Article 14. Why? Because it is creating this arbitrary and unintelligible differentia between the hotels who are providing accommodations and those who are not. It does not have any rationale or any nexus with the taxing policy, and hence also being violative of Article 14, it should be struck down. Lastly, the third limb of the challenge, that the act is violative of the petitioner's fundamental right under Article 19(1)(g), because by virtue of this impost, unreasonable restrictions are being placed on their freedom of carrying out businesses. Are we okay till this point? Do you have any clarifications to be sought or anything else which you need me to elaborate on? Okay, right. So let's pick up the first. Okay, I'm coming to the first point. That's what we are elaborating on, right? So there are these three pronged challenge which has been launched. First one, which is saying that, see, the way in which you have conceptualized this expenditure tax under this act, all that the central government is doing is imposing a 10% tax on someone who's going and spending this amount either to rent the room or to seek that accommodation or to sit in that hotel which is providing accommodations and sitting there and having a cup of coffee, or maybe having some kind of a catering services, etc. The moment you engage with that hotel, you are being imposed with this 10% tax. This kind of a tax is being nomenclatured as an expenditure tax, but this is not exactly how an expenditure tax is known either in the law or in terms of this kind of the theorists of public finance. When you speak about expenditure tax, right, something which resonates with consumption, then the theorists of public finance would not have designed a tax in the fashion in which the government has done in this case. These are not to be understood as a few stray items of expenditures. When one is imposing a tax on expenditure, it has to be a tax on the consumption which one is making, and consequently then you tax it. Under this exercise which has been done by the central government, one is merely using this expenditure tax as a misnomer. Why? Because in essence, what you are really trying to do is to tax the luxuries which the central government knows falls within the domain of the state governments, and so they could not have taxed it in that direct sense of terms. So to circumvent this kind of a limitation, they are naming this levy as an expenditure tax, but in essence, it is not an expenditure tax. It is this kind of merely an ill-fitting mask which has been, put across this act. In truth, this is something which is resonating with the luxury tax. The state governments are already empowered to impose taxes on such kind of items, and therefore one should be striking this down, because what you cannot do directly you cannot do indirectly, right? Merely naming something as expenditure tax and creating it in that sense which is not even in conformity to what its accepted understanding is in amongst the theorists, is not something which should be allowed. They refer to this kind of an expenditure tax as economists would understand it. An expenditure tax accordingly is taken to mean a direct tax on personal consumption, right? See, in income tax, what we are having, you remember our opening discussions that we had, that you might want to, as a matter of policy, choose your base, right? So under Income Tax Act, we are taxing the incomes that one is generating. When one chooses consumption as a basis of tax, right, then you would see it as an expenditure tax, not as an income tax, right? And consequently, therefore, under an expenditure tax, you would tax the total annual consumption minus, if at all there are any exemptions, of an individual or a family or whosoever your taxpayer are. One can conceive of this tax base being computed by adding up all the items of expenditure throughout the year, and consumption becomes your base of tax. Here, however, in this case, by imposing the expenditure tax, what the central government is trying to do is just identify these stray items of expenditure. These are any which ways items of expenditures which the state government would be imposing upon, because the reason which the central government was forwarding for imposing of this kind of a levy was that they wanted to discourage wasteful consumption. They were projecting it as by saying that, look, they do not want this kind of expenditures to be incurred, and hence they are imposing this. Uh, it was, however, the government's argument that, look, the legislative powers of any government cannot be restricted by the economists' conceptualizing of whatever tax that they are understanding it to be, right? So they are saying that one can very well have theoretical understandings of an expenditure tax, but when it comes to the fiscal programs, there are no limitations which can be imposed on the legislative powers of any government by virtue of these kinds of theoretical conceptualizing. The argument which the government is falling back upon is, remember the HS Dillon that we just completed. If the topic is not shown to fall within the fields of legislation in list 2 or 3, no further inquiry is necessary in order to support the legislative competence of the union to legislate on the topic. Expenditure tax was not finding any separate kind of mention either in list 2 or 3, right? And hence this kind of an impost, the central government says we can very well, we are like well entitled to impose this kind of an expenditure tax, which is not finding mention either in list 2 or 3. We are not bound, therefore, by this kind of a limitations whatsoever being imposed by theoretical understandings of how an ideal tax regime should be, or how what exactly should be the nature of a tax. This is something which is a very important argument which was being made, and which also had then subsequently found merit with the court. The central government had argued that, look, the measure which is adopted for the levy of the tax does not necessarily determine its essential character. The object on which expenditure is laid out might be an item of luxury, or it might not be the one. But the fact that the central government chose this measure, right, that you are, whenever you go and expend that amount in so and so recognized class of hotels, it will not necessarily determine the essential character of that tax. The character of that tax is to tax this kind of an expenditure which the government wish to discourage, right? And this is something which is again a very critical kind of a takeaway from this. Anytime you are practicing litigating in tax, do remember this. This is very, very foundational. any measure that you adopt for the levy, right? The quantification that you will do for that levy, it is not speaking about the nature or the essential character of it. It is not a determinant factor of what exactly that tax is, right? Because you're only trying to quantify a measure, not essentially trying to determine its character. Now, the crucial question, therefore, which were being raised were twofold. Number one, whether the economist's concept of this tax qualifies and conditions the legislative power. Second, whether this expenditure which is laid out on what may be assumed to be falling within the fold of even luxuries or even the purchase of goods, could you isolate that expenditure element and identify it as a distinct aspect susceptible of recognition as a distinct field of tax legislation, right? These two are very critical questions which flowed in from this first limb of challenge which the petitioners had brought forth. The first being answered that, all right, whenever these kinds of conceptualizings are being made by fiscal experts or these economists, they will not be qualifying and conditioning the legislative powers. You might draw up as much of a normative framework, but then when it comes to this kind of legislative decision making, a wide latitude is offered to the legislation, so as to choose between what it wants to tax and also how it would want to tax it. The next critical part, which is very essential, which is the reason of why we had that aspects doctrine being implanted in our system. See, this is a case which was argued by Palkiwala on the side of the petitioners. And he was very, very sharp when he said that, look, there is no distinct element in here. The moment the central government is trying to tax the expenditure made in these hotels, one is essentially trying to tax the luxuries. And in all respects, in pith and substance, luxury tax is what is assigned to the state governments. Similarly, if someone is, coming to the restaurant of that hotel and sipping a cup of coffee, and then at the time of the payment, when expenditure tax is being imposed, this essentially means that you are being made to pay the tax on the purchase of goods, which is also with the state governments, to tax. And hence, this there is no distinct aspect which one recognizes. This is all covered by the state field. To counter this, the Attorney General brought in this whole Canadian concept of aspects doctrine to say that, look, just because it is the same subject which is suffering tax will not essentially mean that it is the same tax. Tax, two different governments can impose two different taxes on different aspects involved in that matter. To exemplify, you will find this exemplification, even in this particular matter, where they are saying that, look, when a item is being sold, it is subjected to sales tax. I hope you all are aware of sales tax and excise duty and those kinds of taxes, right? The argument which was made by the government was that, see, when you are selling a good, it is subjected to sales tax by the state government on the aspect of sale. That same item would have been subjected to excise duty by the central government for the manufacturing aspect of it. So even if at the end of the day, when let's say we are, let's say, purchasing a laptop, that laptop would have suffered a sales tax on the sale aspect, by the state government, and the same laptop would have suffered an excise duty by the central government for the aspect of getting manufactured. So they are trying to bring in this kind of an aspects doctrine here. And Palkhiwala had very closely questioned that, all right, you demonstrate what are the aspects, what are the two different aspects in here, right? Especially when someone is going and, sitting in a restaurant and having that coffee, what exactly is the different aspect from luxury vis-a-vis the expenditure tax? Because Palkhiwala was that if you start construing things from this angle, you will start having this kind of a hair splitting that, the moment you will put, let's say, this kind of an example of, paying salary to someone, you can tax that person for having received the salary, and then you can tax the other side also for having availed the service. This kind of mishmash cannot be really be upheld. But yes, that whole Canadian doctrine was being implanted to say that, all right, the distinct aspect, namely the expenditure aspect of the transaction, which is falling within the union power, must be distinguished, and the legislative competence to impose a tax thereon must be sustained. This is what is coming in through the part of the judgment. What are they saying? They are saying that this law which is being imposed, one, it is very well within the legislative competence of the parliament. Why? Article 248 read with entry 97. The tax which is envisaged by this act under the Expenditure Tax Act is essentially a tax on expenditure. It is not a tax on luxuries or sale of goods. There is a distinct aspect involved in here, the expenditure aspect of this transaction, which is falling within the union power, which is not found in any of those lists, whether list 2 or 3, and hence can very well be bundled up under 97. This is what is being also offered as an explanation. The law, with respect to a subject, might incidentally affect another subject in some way, but that is not the same thing as the law being on the latter subject. The law, with respect to a subject, might incidentally affect another subject in some way, but then it is not the same thing as if the law is being made on the latter subject. There might be overlapping, but the overlapping must be in law. The same transaction may involve two or more taxable events in its different aspects, but the fact that there is an overlapping does not detract from the distinctiveness of the aspect, right? So then when they were asked that, all right, demonstrate what is the distinctiveness, this is what was being put across. Just the object of a tax on luxury is to impose a tax on the enjoyment of certain types of benefits, facilities, and advantages on which the legislature wishes to impose a curb. The idea is to encourage society to cater better to the needs of those who cannot afford them. The object of an expenditure tax is to discourage expenditure which the legislature considers lavish or ostentatious. So that while the object of the first would be to discourage certain types of living or enjoyment, that of the second would be to discourage people from incurring expenditure in an unproductive or undesirable channels. Now, I know some of you might be right, but this is what was being put across. Just think of this. This is the distinction which is being drawn. that when this expenditure tax is being imposed, its objective is to discourage expenditure which the legislature considers lavish. The object of tax on luxury is to impose a tax on the enjoyment of certain types of benefits and facilities. And this is something which is therefore being stated that, the same transaction may involve two or more taxable events in its different aspects, but merely because there is overlapping will not detract it from the distinctiveness. And what is the distinctiveness of the aspects which was being recognized? The slide which you just saw. Um, this is therefore the contention which was being raised by the petitioners was found to be unsubstantial, uh, and accordingly it would fail. Let me see the comments in the chat box. Okay. But wasn't there some kind of state tax which already imposed certain tax on consumption of those goods, which can be considered akin to the expenditure tax, which which center tried to impose? Yes, definitely there were, right? In fact, what was being considered is that, see, whenever there is any sale of good which happens in any of the states, right? They were subjected to sales tax, right? Then, of course, in your generation, you would have been aware of that. Now, of course, we have GST, but even back then in the 80s, you had the state governments imposing sales tax, right? So, someone who would go and consume coffee, right? Something which is like it is considered as sale of that good to you, it would be subjected to sales tax. Mind you, service tax was not there way back in the 80s, but sales tax was there. Even within the meaning of the luxury tax, the state governments would have identified certain items of luxuries and expenditures such as these, the ones which this particular case is referring to, would also very well have been capable of getting covered, right? So someone going and having coffee at Taj, hmm, they would be subjected to this kind of a luxury tax if the state government would have provided for. Now, the central government is also trying to put it across as this kind of an expenditure tax, right? And that's where the hotel association is asking that what are you up to? We are already paying taxes to the state government. Why are we also being made to pay taxes now to the central government, right? So it is and it was really a matter of very dense contention. Okay, one explanation further required on the point which was being made that the quantification does not determine the nature. And you want an example for it. Let me think about it. See, the statement which is being made that the measure of the levy will not be speaking of the, or it will not be determinative of the nature of that levy. Let me think of an example. Okay, let me just come up with an example by the next class so that things will be more clear. Right now, there are too many things coming in mind, but not with clarity. I'll come up with an exact example on this point which is being made. Right? So, this is something, the first contention not being accepted. The other two, however, still remains, right? One which was violative of Article 14 and the
Ma'am,
other one with respect to fundamental rights. Yeah, yeah.
so ma'am, the two aspects the court differentiated was that expenditure, you're trying to discourage frivolous or luxurious expenditure, and for
Hmm.
luxury tax, you're trying to tax luxury expenditure.
Hmm. See,
Right? So,
this.
but don't they both come into play only when the expenditure is done? And if that is so, then there is no question of overlap. They become essentially the same thing,
Absolutely.
right?
Right, right.
So, so what is the so there is no
This
so what's the overlap and differentiation I didn't understand.
this is exactly a very problematic area, Mrityunjoy. It's definitely that point which the petitioners were raising. that look, you are actually being very superficial when you say that there are two different aspects involved, because there is none which is involved, right? See, unlike that sales tax and excise duty example which we took, and which is also there in this judgment, where one could very clearly identify the aspect, or even with respect to later on, because this is a ruling which was cited in all the other cases also, especially when service tax regime was put in place, right? The point which I was making a little while ago when we started out before this case, where chartered accountants were questioning that why are you subjecting us to service tax? We are already subjected to professional tax by the state government, right? There also they had identified these kinds of different aspects, that no, state government is imposing professional tax on you for you continuing in the profession. Central government, when it imposes service tax on you, they are imposing it for the services which you will be providing. So that these are two different aspects. One which is appended to your stature, your status of being a chartered accountant, and by virtue of that you are being taxed by the state government. Central government is taxing you because you are providing service. When we come to this specific levy, the expenditure tax, you are essentially not having any distinct aspect which could on which you could pinpoint, right? It's I am in complete agreement when you say that when one is imposing luxury tax, it will be imposed on this kind of an expenditure. When you are imposing expenditure tax, again you are imposing it on that expenditure. But the aspects which is being sought to be distinguished is that under luxury tax you are trying to impose a tax on the enjoyment of certain types of benefits. Under expenditure tax you are trying to discourage that expenditure. But then the question which one could ask in a retort is that isn't that what, for what basic reason the luxury tax is being put in place, on the first count, right? Why are you imposing luxury taxes? Because you want to trump this kind of wasteful consumptions and wasteful expenditures, right? So there is, of course, this case is problematic in the way in which it reasoned out and upheld this aspects doctrine. But yes, that is where it stands. Okay. There are comments in the chat boxes. Would this not undermine the entire federal taxation system? Because by that logic, any tax levied by the state could also be levied by the central government under 97, simply by citing synonymous aspects. Yes, you can. In fact, you will find examples of this replete in the service tax regime, right? So when you had those Kalyan Mandapams being taxed, right, the marriage halls being taxed, they had also brought in this kind of a challenge that look, we are being subjected to the state tax being land and building. But the central government said, no, there's a different aspect involved there. You are providing service by providing this marriage hall. Hence, we are taxing you under the service tax, right? So this is essentially a very problematic doctrine within our federal setup. Another question or a comment, doesn't the CA example also the one and the same in the sense, by virtue of me being a CA, I'm able to provide service and thus the professional tax should alone work? See, even if you would want to go back and read that, the chartered accountants case law, they identify different aspects by saying that look, when state government imposes professional tax, they tax the aspect of your being that professional, your status of that professional, so that as long as you continue to be registered with the Institute of Chartered Accountants, the state government can tax you. Service tax has a different aspect because that will be taxing the moment you start providing services, right? So the distinction which they drew is you might be a chartered accountant, and as long as you append that status to you, professional tax will be imposed upon you by the state government. If, however, you do not engage into any active practice and you do not provide any service, service tax will not be imposed on you, right? So this is something which has very consistently been imposed the moment there is a challenge, right? So yes, a very interesting but very deeply difficult kind of trend that we set out for our jurisprudence. Hmm? Okay, I think we should close the class here. We will continue with this tomorrow, uh, right? And take the other limbs of the argument. Thank you very much.